There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice, brought to you by TackleTrading.com.
Welcome out to the Trading Justice podcast. My name is Matt Justice, and I'm going to be your host here. I got an absolutely special guest here tonight, Gino Poor. Gino, go ahead and say hello to everybody.
Hello, how you doing?
Oh, well, I'm doing fantastic. Was that to everybody or was that to me? Oh, you didn't get that. Okay. Anyways, Gino, how you doing tonight?
Doing pretty good.
Great, actually. How was your expiration Friday?
I was just going to ask you the same thing. It was actually quite nice because we had a little spike up in volatility yesterday.
Yeah.
Which was nice because I closed out my options because it's the end of the month. It's expiration Friday. Got rid of all those expiring options, and that little spike in volatility, I'm not going to say little, it's actually almost a 30-something% spike in the VIX, which is historic.
36%, man. It was a huge spike in volatility yesterday. We had some geopolitical situations come out. We did a podcast yesterday with Tim on it. Volatility spiked about 36% on the Israeli and the news coming out of Ukraine. And, honestly, Gino, as a credit seller, which you primarily are, you love your positive theta, you had to love that spike in volatility.
Yeah, it was perfect timing because now yesterday and today, it's time to enter next month's options. And that little spike in volatility made those premiums that much more juicy. So I took advantage of them. Everything that I've been eyeing actually had some nice premiums. So I actually got a little bonus in my selling of options. So
couple extra percent, right?
Yeah, perfect timing.
Many people that listen to this podcast are fairly new to trading, Gino. And just to kind of introduce Gino to the crew who listens to the Trading Justice podcast, Gino's been trading in the markets for about 14 years. He's been teaching people how to trade in the market successfully for since 2004?
Yeah, actually, I started helping investment clients. I've been trading 14 years. I tell people I actually started almost 17 years ago. I discount the first 2.5 years because I was trying to figure out the market on my own.
Yeah.
And a lot of people do that. I think everybody tries that at first. Why not try to do it yourself first, right? Is that what you did?
Well, it is. It is. I actually started back in 04, 05. And I tried it on my own, but as many people figure out, when they try something on their own without proper discipline, structure, you don't even know what you're doing right or what you're doing wrong. And whether you make money or lose money, it doesn't matter. You simply don't even understand how to approach whether you're doing things right or wrong. And like you did, I tried to do it on my own at first, but it just didn't work out.
Yeah, and I thought, because I'm not a dumb individual, I'm definitely not the smartest, but I remember figuring out the Rubiks Cube on my own. I don't know if you remember the Rubiks Cube.
Oh, yes, the little square things, red and yellow and white and blue and whatnot.
I don't know, 3 or 4 months. I had a problem sleeping at night, so what I used to do is I'd play that Rubiks Cube until I fell asleep. And then about 3 or 4 months into it, I'd just bore you to death and you'd fall asleep. One day I go, I think I solved it. And I couldn't believe I solved it. Sad thing is nobody believed me, right?
Yeah.
So I think they said, you just moved the stickers. And, I started my own business.
Did you just say
you just look for an address and drive around until I find it. I'll figure it out.
Yeah.
And I thought I could figure out the stock market. It can't be that hard.
So the way you figured out the Rubik's Cube was you basically moved the stickers? Is that what you just said? Did you just admit that?
That's the cheating way.
Oh, okay. Gotcha.
You could do that. That only takes about 2 minutes. But no, I turned those little cubes around until I had a pattern. Found out a little system, a little pattern, pattern recognition. And I started writing things down and going, that didn't work, and backtracking my turns, driving myself nuts, basically. Yeah. And I realized I'm one of those stubborn people that'll sit there and do that until I figure it out. You know what I mean?
Gotcha. So let's bring it back to volatility real quick. So we had a spike in volatility yesterday. And talk to people about what volatility means to the price of options. Why were you so excited about the spike in volatility?
Well, what's happened the last 3 years is the market's been, if you've been watching, it's, most people have been watching, you and I watch it every day, but I mean, most people know this, that the market's been doing pretty darn good the last 3 years. We've had a couple 25% annual runs. And what happens is when the market's that consistent and that bullish, people get what's called complacent, which is basically the opposite of fear. And on the market, people have no problem just buying stock and contributing to their 401k. They see their statements every month. Everything's rosy. Your 401k is going up. You got job security. You're adding money to your 401k. The news is reporting the stock market's hitting new highs every other day. It just feels good. So you see, 90-something% of the public, pretty much 99.9% of the public, they think the only strategy out there is buy a stock and just wait for it to go up. So they're in the hold and hope, hold for the long run. They're investor mentality, and that's how I was the first couple of years. But you see, the professional traders like us, there's a whole nother world. They're just looking at the tip of the iceberg. The rest of it is there's an option market out there. There's a futures market. There's a commodities market, derivatives of stock. And it seems kind of confusing when you say the word options market, but all it is there's insurance products on the stock. Basically, coupons that you can buy. It's called options. Insurance you can buy called options. Like, for example, put options. You can buy these things to allow yourself to sell the stock at a certain price. So I don't want to watch my $100 stock drop to zero.
Yeah.
But for a couple dollars, I could buy an option that lets me put it back at the market at $100 or $95 or whatever price I want. I buy that price. I buy my sell price. I buy my insurance. And there's some people that are allowed to short stocks. They're allowed to play the downside, and they're allowed to buy call options. They're allowed to buy options that actually protect themselves if it goes in the wrong direction. So bottom line, options are really the number one reason the industry buys them. The professionals out there, the bigwigs, the institutions, they buy options to protect their position in case they're wrong. And they pay a small premium to what they do, hedge or insurance. It's kind of like, I remember my house, I don't know about, you're in Utah, I'm in California, but our house, I bought my house for $400,000. That seems like a lot of money, but back in 2003, that's considered cheap in California. My $400,000 house went up to $650,000 in 1 year. And I go, wow, I just bought this house and it's already up to $650,000. And something, and I mean, everybody kind of knew the housing market was going to drop. But I remember telling my wife, wouldn't it be great if I had some kind of insurance that no matter what happens to our house, if it drops in value, I can still sell it at $650?
Yeah.
And she goes, yeah, is there an insurance out there? I go, well, not really. I mean, nobody's going to insure your house to guarantee that you can sell it at this high price. Wouldn't you like to lock in this high price? Well, you can do that in the option market with stocks, and it's called buying puts or buying calls. So what happens is nobody buys the insurance when the market's complacent. Nobody really dabbles in the option market. The volume in the option market for insurance just isn't there because everything's doing good. Why do I need insurance?
Well,
it's kind of like I'm a great driver. Why would I buy car insurance, right?
That's true. You'll love this. So I was giving a workshop today here in Anaheim, and I basically asked everybody, I said, hey, how many of you own a home? And literally, there was probably 50% of the room that owned a home. And I said, how many years have you owned a home? And so I added up the entire years that somebody had owned a home. And basically I said, okay, so if we take that and we times it by 12, right? We have been buying insurance on our home for literally, I think it was 1,248. 1,248 months we have been buying insurance on our home. And I said, why do we have insurance on the home? And everybody's like, well, what if it burns down? Or what if an earthquake happens? Or what if, the tsunami happens? Or whatever, any type of calamity, right? And I said, okay, so how many of you have ever filed just a natural claim on your home? And literally, out of the entire months that we have done this, 1,248, we've done it 5 times. And so I said, you are paying insurance every single month to guard against a 0.005% probability of you filing a claim on your home. And I asked everybody, I said, okay, is buying insurance on your home bad? And like, no. What if it goes down? What if it happens? What if it burns down? What if there's water damage? Whatever the what if is, right? And I said, okay, so what's the greater asset? Is a greater asset the stock you own or the home you own? And when people think about that, they're like, oh, well, okay, it's the stock. And I said, okay, so how many of you have ever bought insurance on your stock? And they're like, no, why would we ever do that? And yet we have an earnings report every single quarter that there's a 50% probability of their stock going down. And yet nobody buys insurance. And that's kind of what you're talking about, is the options market is a derivative market on the stock market. And people buy insurance. They buy insurance for economic calamity. They buy insurance to guard against the risk on the home or their stock. And yet right now what we're seeing in the marketplace is nobody's buying insurance because what's the risk out there? Correct?
Yeah, right, exactly. And if you get complacent and you think, I don't need it, I mean, look how good everything is.
Mm-hmm.
The thing is number one, the biggest thing is most people don't even know about it, so why would they even buy it?
True.
But also number two is the professionals and the bigwigs on the floor, the institutions that are watching every market tick and every news break. They can load up on it really quick at the last second or right prior before everybody else does. So what happens is the last few years, the volatility index, which tracks the prices of options, which they call the VIX, the VIX, is a gauge that measures the price of the options on the S&P 500, basically the market. And it says, what's the average price of the insurance? And it's on sale the last 3 years. It's hit record lows. It's cheap. It's a great time to buy because it's cheap. But the reason it's a great time to buy is because nobody's buying it, so the price goes lower. And it's lower and lower because nobody's buying it. And there's the market selling it. So to get people to buy it, the price is cheaper, just like any product. But yesterday, right before option expiration Friday, we had a couple of economic news or events come out, and I don't know if you caught it, but I'm sure that everybody caught it. There was a flight that went down that got shot out of the sky.
Yeah,
above
the
Ukraine.
Malaysian airline,
Yeah,
seriously.
God, another Malaysian. God, how many times? That's just got to be bad luck for that company, right?
Honestly, Gino, I was, outside the human condition, I just kept thinking to myself, is this seriously another Malaysian airline going down?
Right? I mean, what are they go in threes, and that's number two, right?
I mean, the odds of a Malaysian airline 3 months ago getting, lost at sea, and nobody has found it yet. Now we have another Malaysian airline getting shot out of the skies in Ukraine. Well, did you see what happened to that company today? I mean, down 14% today. Everybody and their dog is just selling that company right now. And, it's like, seriously, what are the odds of this happening to that company? And, it's sad and it's a tragedy. But at the same time, like we were talking about yesterday, there's a real economic impact to all of that. And when we saw that news come out yesterday, we saw the VIX spike by 36%. And that's kind of what happens. I mean, when we see economic situations like this, when we see, geopolitical situations just increase, the immediate reaction is not to sell in the market. The immediate reaction is to go out there and buy insurance in the market. And they go to the options market and they just buy put options.
Right. And see, that's what learning how the market works really benefits the trader. And see, traders spend so much time educating themselves. They got to look at how the market really works, what the bid ask really is. But you're right. Watching the big institutions, and I've been blessed with meeting so many great people in the market. I have a friend that you've met before too, Dan Howe, out in PTI Securities, and I've been on the floor with him and been out with some great people on the floor, and they have such huge positions in the stock market. It's faster for them to buy insurance than it is to dump their position. Well, they're going to dump their position. What they do is they buy the insurance because it takes them weeks to get out of their position.
Well, and
their stock position, but it takes a minute to buy the insurance.
That's one of the things that people don't understand is that when institutions, hedge funds, and all that, and you mentioned Dan from PTI, Dan, I mean, I'm sure he did the exact same thing, just like everybody else does. But the initial reaction is just go to buy put options. That's the initial reaction because that's the quickest, that's the easiest way. You're leveraged, you're protecting a large percentage of your portfolio because these individuals like Dan, they can't go out there and just unload their stock. There's not the liquidity. Well, there's not even the liquidity out there to do that. Right. So they can't do it. So they go out and they buy put options, and that's what causes the big spike the way it did today, or excuse me, yesterday. And you know that's the same thing the rest of us do, right? I mean, we react the same way. But at the same time, it's important to understand how the option market works so that you can use it to your advantage as well. Because like you said, the VIX has been historically low, and buying insurance right now is very, very cheap given the fact that the market's at a 5-year high.
Yeah, and you know what's nice is understanding that when it's cheap. Now, I live in California, and we're known for earthquakes out here. Yeah. And if there's not an earthquake for a long time, you start getting advertisements in the mail about discounts on earthquake insurance because nobody buys it. The funny thing is as soon as there's a tremble, there's a decent enough shake to wake up the world in the middle of the night, and everybody's panicking, and the news is flooded with the earthquakes. I don't know if you've had a chance to be out here with a nice earthquake, but it startles you. You know, you run out of your house, and you figure like, you know, the world's coming to an end on these. Your house is shaking. That's when most people go and buy their insurance, and guess what? That's when the price is really expensive.
The highest, right? And the probability of something happening back to back is not very high, but that's when insurance companies make their money.
And that's the way we are. I mean, we're like, we don't buy it till we need it, right? That's how people are. Nobody wants to buy insurance till they need it. But when you need it, that's when it's most expensive. And Buffett always says, hey, when people are scared, that's when I'm buying. And when they're complacent, that's when I'm selling. Yeah. It's the same thing, you know, the insurance market. When it was cheap and nobody was buying because it was cheap, that's when I was buying. I was buying my insurance. And really, I'm last time I talked to you, I forgot to mention, it was earlier today, is yesterday, what I really liked about it is we had a pretty good down day yesterday on the market. Yeah. But my portfolio was up. Not huge, but it was positive because of my insurance.
Well, talk about that for a second, because most people, when they first come into the market, they think there's a belief out there that they have to, you know, they buy stock and the market has to go up for them to make money. How do you make money in different market conditions? How do you make money in a bull market? How do you make money in a bear market?
See, that's, oh boy, I could spend a lot of time on that. But you see, in the bull market right now, it's real easy to make money if you buy a stock or buy calls. And it's great. You know, I mean, any bullish strategy works. But I'm always taking a percentage of my account and preparing for the bear market. We call it hedging. You know, that's what hedge fund managers do. They always get ready for the other side. And, you know, you learn some real neat techniques. Every trader has their own techniques as far as market internals, looking for that turning point when it's going to go bearish. But that little spike in the VIX, I actually had calls on the VIX that were cheap and, you know, slightly out of the money. And I actually sold puts on the VIX that were in the money. And if it doesn't pay off, I just roll them to the next month because my portfolio is so big that I need some kind of insurance. And it finally paid off. And what's nice is I didn't watch – I had a loss in some of my stock holdings and some loss in my bullish positions. But the amount of my insurance dwarfed that, and it made up for it. And that's when you really get that confirmation pat on the back that, wow, you're a good trader. You know, you prepared for a down day.
Well, I'll tell you what,
something
Gino,
you have to do.
The last week in the market, the markets kind of came down a little bit, especially in the Russell 2000. And, you know, when we have a big down day in the market, I typically get like a lot of emails. And it's like, oh, you know, what's going on? What's going on? Are you okay? You know, because most people know that's what I do. I trade. And I'm like, you guys have no clue. I love it. I love it when the market goes down. You know, it's like
you ever get a family member calling you and going, "Oh man, I'm sorry, I heard the market really dropped. Is everything okay?" I mean, they act like you're broke, right?
Yeah, they act like, "Hey, do you need some money? You know, do you need a handout? And you're like, you have no clue what you're talking about. Yeah, but you appreciate the fact that somebody's caring about you enough that they're going to call you. But you're like, I actually had put options on the Russell 2000, so I'm good. I'm good.
And what's funny is they only know one strategy. They just think you're buying and holding. So they always ask you, so what stock you buying? Well, I might be buying Apple today, and I might be shorting it tomorrow. But you're afraid to tell them, because what happens is it leads into other questions and other questions.
That's exactly
they don't know you
right.
have 50 different strategies. Not just one.
You don't want to open the discussion because the discussion leads to so many avenues. And they're like, hey, are you okay? I mean, the market went down today. And you're like, you know what? No, I had put options. Well, what's a put option? Well, a put option is the right to sell a stock at a certain price, but I'm not going to actually execute that right. I'm just going to make money as the stock goes down. Well, what does that mean? I don't understand what that means. I thought you can only make money as the stock goes up. You're like, yeah, I'm not really willing to discuss this at the time. And it's just amazing how people think like that. Because when you talk to consumers out there in the marketplace, they always want to hear that one thing. What is the one thing that you need to do to make money? And it's like, well, sometimes I'm long and sometimes I'm short, and sometimes I'm buying call options and sometimes I'm buying put options, and sometimes I'm selling call options and sometimes I'm selling put options. They don't understand that, and they're not willing to put the time into really kind of understand exactly how traders approach the market. And that's the weird dynamic in the marketplace. I want to switch the topic real quick, and I want to talk about kind of how you approach the market. But before we get into that, I want to talk about your story real quick, because I just get absolutely fascinated. And I think the Trading Justice, and you can check us out at www.tradingjustice.com. I want them to hear kind of where you came from, Gino, because I just absolutely love you. You are the absolute best credit trader, theta seller, cash flowing just king. It's the reason I've dubbed you the theta maker, and it's the reason why any time that I've ever had somebody that wants to just sell options, I always say, you got to go to Gino Poor. You got to go sit down on the beach in Redondo, and you got to just watch the bikinis just in their roller skates, rolling by.
Absolutely.
And you have to learn how to do what Gino does, because what Gino does is he just cares about theta. And I want to talk about kind of your story real quick. So, Gino, kind of talk to me a little bit about where you started at in terms of when you started, when you made the decision that you wanted to become a trader, where you were at the time.
Yeah, it wasn't my goal. Like I tell everybody, I never thought being a stock trader would be fun. I just thought it'd be boring, because again, all I thought was you look through books and numbers and find out who's a good company and crunch numbers like an accountant. You'd buy a bunch of stock, and you have to have a bunch of money. That was another thing, is you have to have a bunch of money to buy the stock, and you have to read charts and open up the paper. And from my perspective of it, and the rest of the world, it didn't seem like fun. I thought it'd be funner to be a fireman or a cowboy and all that other stuff, it just wasn't my plan. But being a bad employee, working for my family, and being in the military, I wasn't a good employee, so I just started my own business. And it wasn't my first business. I started many businesses, from multi-level to anything you could think of. And I had a legal service that was actually running errands for lawyers, and it was doing good. And I enjoyed the freedom of being an entrepreneur and starting businesses and just running with it. And I'm a hard worker, and I don't mind doing that. And I enjoyed not being an employee, but the problem is I was tied up, 12 to 16 hours a day. And I remember spending the night in my office just to be there first thing in the morning, because it was easier than driving home. And I was dedicated, and then after a few years and packing away the money, my dad said, you need to start investing in something. Yeah. I was young. Why do I need to invest? You don't think about that when you're young, and that's the biggest mistake. If you start out when you're young, it's such a big advantage.
Makes it a hell of a lot easier when you're 37, 40 years old to get out there and make some money when you're young.
Yeah, you feel like you got to catch up. You're like, yeah, and I always had elderly people tell me, contribute to your 401k, IRA, plan for the future. Heck, I didn't even know if I was going to live past 38, 40, you know.
Mm-hmm.
Why would I invest money? I wanted to have fun. But I got really involved in my business. I couldn't believe it was growing. I was actually doing something on my own that was successful, and I finally had a business that was growing. And it was growing. I mean, I had money coming in and people calling me. I was busy. And that's why they call it business, because you're busy. And then I married my lady because I didn't have time. And then you know, you have a couple of really close friends pass away, and you go, man, we used to hang out all the time, and now they're gone.
Mm-hmm.
Shoot, they're not coming back. I really wanted to have some more good times with those people. And then family members, and then all of a sudden they move away, and then all of a sudden, you know, you got nephews and nieces that they're little babies, then all of a sudden they're young men and young ladies, and you're going, where's the time going? Oh, you're working so hard, and you start thinking, okay, being an employee, at least you had a life after 5 o'clock. And so I started thinking about investing. I said, yeah, I need to invest because someday I do want to retire and not have to work. And I looked at real estate. I looked at certificates of deposit at the bank. I looked at, you know, putting money into art, whatever.
Yeah.
And I heard this seminar one time. You know, my dad told me about stocks because he had a little portfolio going. And we bought some stock together, and he showed me how to do that. And I just thought it was boring. I said, okay, buy a stock, and then what? And he goes, I check it every once in a while. When it gets pretty pricey, sell it. You know, great. And it wasn't moving that fast. Sometimes it would. And I didn't know when to sell it. I just said, I'll just buy a whole bunch of shares. Oh, they pay dividends. They pay dividends every quarter. So I was looking for dividend players. Nothing really exciting. I mean, it just seemed kind of like, yeah, I got a portfolio of a bunch of companies I own, and someday I'm going to sell these, and I don't know when that day is. So I bought a whole bunch of shares, and then somebody said, yeah, you're wasting a lot of time and money on stock. You need to learn options. So I had a free couple hours. I stopped in at a seminar, and an option guys were there. They're teaching, you know, like we do, and they told us strategies, puts and calls and options. And I'll never forget, I sat in the back of the room, Matt, because I was going to exit out of there the first time my pager, back then we had pagers.
I love the fact that you just brought up pagers.
And I had one that vibrated. That was the advanced one.
Oh,
so
that
it didn't go off.
Very well. Yeah.
And I think I had two of them. One was personal, one was for business.
Yeah, of course.
And then beep, 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 beep. And, you know, and all of a sudden I'm sitting there just waiting for my pager to go off, waiting for an excuse to leave, you know, because I had a portfolio.
All I have is one question for you. Did you have the pager on your belt? Did you have it on your belt? I just want to. You had a pager on your belt. Okay, so the pager went off. It, right? Of course. Well, you know, it made you look cool and, you know, important and everything. So, all right. So you had the pager on your belt. You're sitting in the seminar, and what made you believe that
what happened
this was something that you
really
could do?
Life changing. I had a bunch of shares, and everything was good. Everything was complacent, right? And my stocks were going up. But the guy said, did you know if you own stock? And I said, yeah. He goes, you can sell a call. And I'm like, what's that? That's where you sell a call. And I had a stock that was like $22.
Mm-hmm.
And he says, well, where do you want to sell it at? And I raised my hand. I said, I got a $22 stock. I'll sell when it hits 25. Just, you know. He goes, yeah, that'd be a good run. He goes, why not sell somebody a call? And right now that stock is going to give you 50 cents per share.
Mm-hmm.
And I go, what's that mean? He goes, they're going to give you 50 cents while you're waiting. I go, waiting for what? Waiting for it to get to 25. I go, what happens when it gets to 25? He goes, you don't have to sell it. Somebody's going to take it away from you. And I go, well, why would I do that? And they go, well, you're going to sell it at 25 anyway, right? And you're going to make $3. And I go, yeah. Well, until it gets there, they're going to pay you every month 50 cents on each share. And I had a few hundred shares, and I said, wait a minute. So I'm making now. What if it doesn't go to 25? They go, well, you keep the 50 cents. And I go, so I actually, you know what? Thinking twice. I don't want it to go to 25. I just want it to kind of hang out.
Cash
he goes,
flow
yeah, that's good
stock.
too.
Yeah.
And he goes, every Friday, the third Friday, they expire, and then you do it again the next month. It's June, and then when June expires, you can sell to July. But now if it goes to 25, they're going to take your stock away, and you're going to get $25 a share, which you wanted anyway, and you get to keep that 50 cents. And I looked around the room, and I go, somebody's pulling my leg here. And then he went on to a couple of other strategies, and I started drawing it out on paper. I was just flabbergasted. My pager went off, and I ignored it.
Mm-hmm.
because I was in a zone. I was in a zone, and I'm going, wait a minute. I've been trading. Like I said, I was already trading like a year and a half, and I never heard of this. Now, everybody left the room, and I was still trying to figure something out on paper. The instructor came back and goes, hey, can I have any questions? Can I help you? And I shook my head, and it all clicked. And I go,
now, Gino, you were before we cut out, we had some internet problems, but before you cut out, you were talking about how, you know, you were investing when you first started learning how to trade. You were talking about how the instructor in the front of the room was talking about how you could sell call options, get a premium on it. And I want you to continue about the eye-opening experience you had when you first learned how to trade.
Right. So, having been trying to figure out the market for the year and a half before the class, I sat there in the back of the room waiting for my pager to go off to exit, and they explained a covered call where you sell a call against your stock, and I already had stock, and I couldn't believe that I could have been making money or more money on top of my stock holdings just by selling calls every month. And, you know, I broke it down in my business where I was making about $50 to about $70 an hour based on my business, my profit, how much time I was putting in. But I said, wait a minute, I could push a button and make $50 right now. I could push a button and make $100. And no matter what happened, that money's mine.
Yeah.
Just because I own a stock. It's kind of like owning a house and renting it out. Just because I own a house, I can rent it out and make money. Mm-hmm. And I was just shaking my head, and I was just in disbelief. And I was mesmerized that nobody told me. I felt like, okay, why? How come nobody's told me about this? And why didn't my dad tell me? Why didn't people at Trade Options tell me? Why don't they tell me on the, you know, there was a stock trading channel. Where's the books on this? You know, why doesn't everybody else know about this? And I was just like, it was hard for me. I was just mesmerized. And the instructor said, well, this is what we do as traders. And I go, well, what about just buying and holding? They go, that's an investor. Mm-hmm. And then he said, by the way, there's about 30 more strategies. That's just one of them. I shook my head and I go, you've got to be kidding me.
You know,
there's 30 more?
It's absolutely amazing because what you're talking about is a cover call. And cover call is one of the most common conservative strategies you can do in the market. It's literally one of the most risk-adverse trades you can do in the market. And Gino, this morning I was in my class today, and I was like, "Hey guys, listen. How many of you would like to, you know, average 3-4% monthly returns?" And everybody's like, "Oh yes, absolutely, 100%, done." And it's like you're leading them to water, but you got just an absolutely just surprise for them. And I pulled up Apple. You were talking about Apple earlier today. And we were getting about, after I'd done the trade, I was like, we were getting like 3.9% monthly cash flow, right? And I said, so after I taught the strategy, I was like, how many of you like the cover call? And it was like, I love the cover call. And I said, on a scale of 1 to 10, 1 being the boringest trade you've ever done, and 10 being the most exciting, amazing, you know, trade you've ever done, what would you put the scale of the cover call? And they're like, 10, 11, 12, right? And I was like, oh, if you guys only knew what a naked foot was. You know?
How true is that?
I mean, seriously.
And then in the diagonal calendar, which is 1/5 the price of a covered call, you know, and what was funny is I said there's 30 more strategies, and what it got me, Matt, is I was so worried that every day and every week that went by, I was making money, but time. Mm-hmm. I was like, I would just love to do nothing for a week, but you got to keep that money going as a business owner. You got to keep that job going as an employee. But then passive income is what made sense. I started realizing passive income, when you could do something for very little time and it pays you for time, you know, it expires. And I said, well, I was going to get a rental property, but this seems a lot better. Mm-hmm. And because I had bad credit back then, I said, I could do this. And I just was like, okay. I started picking up books, any book I could find, Barnes and Nobles, whatever. I started grabbing any education I could. And I said, I'm not going to figure this out on my own, because I was getting very little out of trying to figure out the market on my own.
Yeah.
And so I started seeking out people that traded, people like us now. And I said, wow, I really, really appreciated and was thankful I ran into that class, the books, the education. It changed my life. And I said, God, I'd love to give back sometime, and this is something that I owe the company that taught me. I go, wow, I just, it was amazing. And now that anytime I see a strategy where I can make money on time for very little effort, very little labor, very little thinking, I love it. And that's why I like options. Options are the one thing out of the whole financial market that you can sell, and they decay.
Yeah.
Well, futures, you can't do that. Commodities, you can't do that. Gold, you can't do that. Real estate, you can. You could buy real estate and rent it out. That's passive income. But options, you can do that. You can have passive income, and that's the secret. Cash flow is king through passive income.
Well, let's talk about that for a second, because what you're talking about is theta. And I have dubbed you the theta maker many, 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 many times.
Oh, and I like that title.
Well, it's sexy. It's awesome. But talk to everybody about what theta is. How you actually make money when you sell options.
So the best way to explain it is, I bought let's say I buy a pen. I buy a pen and it's full of ink. A nice pen, one of those nice pens that you only use to sign something every once in a while, but you only have enough ink to last you 30 days. And by the way, that's the way. I don't know if you ever knew this, but they used to fill up pens with ink and keep the same pen back in the calligraphy days, or they dip the feather in the pen. They dip the feather in the ink.
Yeah, they dip it in the ink and they go ahead and draw it. Yeah.
Right. So they'd have to pay for the ink. Well, let's say you have a pen and the ink is $30. So basically, you buy a disposable pen, it's $30, and it only lasts a month if you use it every day. Well, if you buy that pen for $30 and it runs out of ink in a month, you just lost $30 in a month, or basically you wasted $1 worth of ink every day. So your pen's costing you $1 a day. It's $30 when it's full of ink, but that ink goes lower and lower and lower every time you write. It's losing ink. It's losing value. If the pen's only half full of ink, it's only worth $15. And guess what? After 30 days, there's a drop left. It's gone. It's useless. You throw it away. It's useless. That's called decaying. The value's decaying. It's losing value. It's losing its worth. It's kind of like a car. You buy a car and it just decays over time. And that's another good thing. Is like another good example is a car salesman. They're theta makers. They sell you a $40,000 car. And what do? You come back 10 years later, it's not worth $40,000 anymore. It might be worth, let's say, $2,000. It lost $38,000 in value because it's old. It decayed. It's used. What do? You trade it in. So he sold it to you for $40,000. Then he buys it back from you for $2,000. He just made a killing. And then what does he do? He sells you another car for $40,000, and 10 years later he buys it back and trades in the value at $2,000. He's using the time decay, the decay of the card. So theta is time decay, something that decays over time. So if that pen is losing $1 a day, options that people buy on stocks for protection, options that people buy, somebody has to sell it to them. So somebody buys a $3 option, whether it's a call or a put, I'm the seller. I sell it to them. Why? Because they're giving me the $3. And if it expires in a month, I'm making 10 cents a day on each share. 10 cents a day, and the options are priced in 100 shares, so it's basically $10. And the nice thing about it is that's my money. It's going to go to zero on expiration day. And if I sell them a call, I own the stock. They could take my stock from me, that's fine, but I got that money. If I sell them a put, they bought the put, I sold it to them, they can give me the stock. But remember, they gave me money up front to help me purchase that stock. So really, they're giving me money up front. And if the stock does nothing, that money's still mine just because of time decay. So it's like option expiration, and it's time the new month of options come out. It's like Christmas morning. I go in there and I sell a bunch of options. And what's nice is, here's one for $3. I'm going to make 10 cents a day. Here's one for $6. That's 20 cents a day. Here's one for $5. It's 50 cents a day. Here's one for $1. You add it all up, and you got your total theta.
Well, in terms of theta, theta means time decay and whatnot. Let's talk about theta targeting for a second. What is the concept of theta targeting, and explain exactly what it is?
You mean like budgeting?
Yes, exactly.
Well, my target theta when I first started was I was happy if I could just bring in an extra amount of money, just passive income to pay for my car. Back then, I had a Zuzu Rodeo, which was cool back then, right?
Well, it's 1998.
$297 a month, and I don't even think they make them anymore. But I remember it was $297 a month, and what I did, which was really one of the Rich Dad Poor Dad strategies you read in Rich Dad Poor Dad books, is using other people's money.
Mm-hmm.
Is I sold my old 4x for almost $4,000. I sold that. I used that money to buy stock. So I sold my truck for capital, and I put it I added it to my capital to trade with, and I used that money to buy stock. Now, since I own the stock, what I did, Matt, is I sold enough calls against it to bring in $300 a month. So really, by selling my truck, the capital was creating what we call money out of thin air, theta. It was, since I have that stock, they're paying me to sell the calls. So I sell the calls, $300 worth every month. That made my car payment. Mm-hmm. So I really basically was using my used truck to buy a new car. And that's a great strategy. I just because I own the stock, somebody's paying me money for it. And somebody's making my car payment for me. So I needed to make $300 a month. And you break that down per day, that's, $10 a day.
Yeah.
$10 is not hard to make selling options. It's dirt easy. I mean, it's a couple covered calls, a couple naked puts, whatever. And my theta at the bottom of your brokerage statement tells you what your theta is. So basically it tells you how much you're making per day on options expiring. Now, if you're a buyer of options, it tells you how much you're losing per day. But see, I'm a seller of options. And 10, that's real easy. It doesn't take much. So it's, I could drive around in nice cars and not worry about it, or lease them or whatever, because I'm not really paying for them. It's the market. I'm selling options, and I know what my theta is. So you can find out your budget. If you need to make $3,000 a month, you got a theta of 100 a day. If you need to make $30,000 a month, you need a theta of 1,000. We already figured out in the Theta Club, if you want 100,000 a year, you only need a 275 daily theta. So what's nice is, as an investor, I can budget. What do I need to make per day, per month to cover my expenses? And that's a good feeling, because a lot of people out there trading, Matt, and you probably felt this too when you first started, that you're buying stock and buying calls, and correct me if I'm wrong, but didn't you feel like you're in a band or waiting for that next gig because you didn't know how much you're going to make the next month?
Well, that's based on delta trading,
Yeah, you're
absolutely. I mean, it was always about, you have this euphoria about, okay, if I buy this option and it goes up, I'm going to make this amount of money, and it's going to be awesome, and it's going to be sexy, and we're going to just become rich, right? And then all of a sudden you realize delta trading is so aggressive and it doesn't work out that way. The one guarantee we can give you in the market is time, and that's right. Theta.
And I like buying stock when it works out and stuff. The problem is there's no guarantee that stock's going to move up. And there's no guarantee it's going to move down. And it could move sideways. And you know what? I did find out there is a guarantee, Matt. I did find out there's 100% guarantee that I did find in the marketplace. And that's a good market to play when you could guarantee something, is this. Stocks do not move on Saturday and Sunday.
Are you trying to
have you noticed that? They don't move.
It doesn't move on Saturday? So tomorrow the stock is not going to move. Is that what you're going to tell me?
Yeah, because the market's closed.
True.
So it takes buyers and sellers to move that stock. So it occurred to me, wait a minute, how many Saturdays and Sundays are there in a year? And then during the week, I noticed you're going to get an up day, because there's 5 days a week when it does trade, right? You're going to get an up day, and you're probably going to get at least one down day. Well, that's neutral, right? Mm-hmm. So there's really only 3 days out of the week the stock moves. The other 4, pretty much a wash. So basically, the stock's not doing much. And it's pretty boring if you actually think about it. Stocks don't really move that much. And you're not guaranteed they're going to move. There's no guarantee it's going to move up or down. Nothing says it has to go up or down.
Yeah.
So a lot of times when you're trading the market, delta trading, you're buying stock and shorting stock, buying calls, buying puts, you're crossing your finger and going, please move in my direction. And guess what? It can move 3 different directions. You only got a 33% chance. But there's a 100% chance that tomorrow's going to come whether you're here or not. Tomorrow's going to come whether you're alive or not, because time keeps ticking forward. And Saturday and Sunday, the stocks aren't going to move. So the only way to play that is the 100% time trade is to be a seller, to be on the seller side and let those suckers decay in value. So I just don't understand why anybody wouldn't take advantage of that. And that's the exact reason I love options is you've got that one major strategy of selling time, It's always on your side.
Well, most people think that when you first come into the market, you have to be right. You have to sit there and you have to research it and you have to buy a stock and the stock has to go up or the call option has to go up and whatnot. But as a theta trader, you don't care.
Yeah,
you don't
right?
care if the stock goes up. You don't care if the stock goes down. You don't care if the stock stays sideways. And you can make money regardless of what the stock does, and you can make money as the market basically goes sideways.
Right. And did you notice when you first started trading, Matt, that you understand the concept of theta trading, but at first buying the stock seemed more exciting, playing the direction?
Oh, it's always sexier. There's no doubt about it. When you go out there and you buy a call option, I mean, that's like picking up the big stick and going out and hitting a home run.
Right. I actually thought time trading was boring when I heard about the strategies, but I couldn't believe how much money I was losing by not doing them.
Mm-hmm.
And then I take that money, then I go out and buy stuff. Let the market pay for my directional trades, my home runs. But yeah, it's just that's my theory, and I do trade forex just like you do. Mm-hmm. And forex is very important in our economy and day and time to understand it, whether you trade it or not. But that is, there is critical times to buy, to be a buyer. But as far as options, every expert option trader I've ever met, they all agree options have an advantage is the fact that you can sell them because of theta. So it's got to be part of your
I will tell
portfolio.
You this. I have never met an option trader that has been in the options market for as long as they have. Whether it's 2 months, 4 months, a year, 50 years, that does not sell options.
Right, absolutely. And do you have a favorite trade or stock or anything that you actually can do theta trades on or sell options on all the time?
Well, my core trades are always vertical credits, bull puts, bear calls, iron condors, and on the volatility based trades like Amazon and Google and Priceline and CMG and Netflix and whatnot. Those are my core trades.
Right. The big ones, the volatile ones. Yeah, they got good premiums. They're popular.
You know what? I mean, the thing I love about those types of stocks is the fact that you can always guarantee yourself 20% return.
That's nice. I mean, where are you going to get that?
Never, nowhere.
Right? I mean,
literally nowhere.
I literally walked in the bank the other day, and they said, "Hey, they looked at my account, and I make my deposits and stuff, and they, I forgot what the bank teller, what I forgot her name was, but anyway." She said, "Hey, listen, you got a corporate account because I have to trade through a corporation and this and that." And they go, "Have you considered instead of having your money in savings, because I move it out of savings here and there, I move it into the market, and it's just there for backup, for liquidity, so I don't have to take it on my account.
Yeah.
Have you considered our 10-year bond, which is the highest right now among most banks in the nation, at 2.56%?"
Oh wow, that's amazing! Thank you so much.
And I said, "Per month?" And she laughed and said,
yearly.
"Oh God, no, per year." And I go, "Wait, 2.5% per year?" She goes, "No, 2.56." I go,
5,
"Oh, 2.56."
awesome.
I go, "How much better is that than the industry average?" She goes, 0.03. I go, "Oh, so the average is 2.5. You guys are talking 2.53. I go, "Per month or a year?" And she goes, "No, a year." And I go, "When can I touch my money?" She goes, "In 10 years. And I go, "Oh my, you're trying to make me part from my money for 10 years. And most people know they're going to start raising interest rates here pretty soon. So 2 years from now, I'm going to be upset when it's 3.5%. and you're saying it's the best in the industry."
It's insane. It
really is. And what's sad is this person behind the counter, I've seen her quite a few times. She's not young. She's not old. She's been there for a while. She's educated. What blew me away is how uneducated she is about what's out there. And, being at the bank teller, you don't have time to tell them, well, no. I said, no, I'm actually going to be putting that money back in my trading account. Now, ready for this? Here's the funny part. She goes, oh, we actually have a brokerage account you can trade through.
Are you kidding me?
The bank.
Oh, wow.
I go, you can actually buy stocks to my bank account? She goes, sure. And I go, do they even offer stop losses or options? She goes, oh, I have no clue what even that is. And and I'm thinking in the back of my head, yeah, you have no clue, period. And I said, you know what? I'm getting, 2.5% a month on easier stuff that I'm like, my money's not tied up for 10 years. And she looked at me like, really? Is it legal?
Here's the reality. Simply by selling call options on stock you own, you can generate 3% monthly cash flow.
Oh yeah. If you can't get 3%, you're in the wrong trade.
That's one of the most conservative trades in the entire market.
Right. It's so conservative, Matt, that most people don't know this. They let you do it in your IRA and your 401k.
That's true.
And they don't let any risk in those things because, no margin, no loans, no borrowing, they don't want you even touching it. But they'll let you do covered calls in it because they're very conservative.
Well,
yeah.
What risk do you have? I mean, honestly. I mean, you sell a call option, you have to deliver the stock. Who cares?
And the money's still in your account.
Yeah, that's true.
Money's still in your account. It's like, there's no risk. It's just you going out of the stock and into cash.
So, Gino, let's kind of sum it up here. What is the one thing you would give new traders a recommendation on?
Well, if you're going to go in the options arena, you got to be a player of the selling side. You got to take advantage of Theta. That's a life changer for me. And that's why people get into the option market is because of the cash flow you create as a seller. And most people have jobs, Matt. Most people, are professions and careers, and they're busy. There's parents and stuff that are homemakers, but it doesn't take much time to, number one, learn how to sell options, and number two, push the button, bring in the cash, and do that every month. After you do it a half a dozen times, you start going, why didn't they teach me this in high school? That's my biggest thing. Is some people have to learn how to take advantage of time. Because time is more valuable than money. It really is. And you probably attest this to me because, you have kids and, they're kids. They're fun. But then one day, when you're not paying attention, they're not kids anymore. They're young ladies and young men. Mm-hmm. And you start realizing, wow, the days are long sometimes. The days seem long, but the years are short. And you go, wow, did I spend enough time with them? Because now they're on their own. Did I put enough knowledge in them? Did I do everything I was supposed to do? Because time slips away. If you're not taking advantage of it, poof, it's really, really, and so there's strategies out there that take advantage of time. And that's, whether it's a rental property or selling options or credit spreads, I just treasure them. I think it's great, and I look forward to them. And that's what motivates me is this weekend, I'm still making money, but I'm going to be hanging out with my daughter and her friends. And that's what I like to do. And, sometimes Monday or Tuesday, most people are at work. I might go to school with my daughter and help out, knowing that I'm living life like you're supposed to, how most people want to. And all it takes is a little motivation and education.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.